Good evening. Good evening.
Hello.
All right, people will be coming in. Thank y'all for hanging with me this evening. How did you find out? How did you find out about tonight? How did you find out about tonight? Drop it in the chat. Awesome. IG, email, Lorenzo in here, Team Blackprint, yes, sir. All right, so I imagine people will be joining for the next couple of minutes or so. For those of you all just popped in, I asked, how did you find out about this evening? Excuse me 1 second. Rika.
Hello.
Like the glasses.
Oh, these are old. You haven't seen these before.
Those. It's been a while.
Yeah.
All right, so we'll start probably about 7:03, 7:05. Give people a little bit of time to pop in here. More people to pop in. Imagine people finishing up dinner or just arriving home, and so just want to give people a little bit of time. For those of you all just coming in, let me know how you found out about this evening. How did you find out about tonight? And then another question would be, what are you looking forward to most? What are you looking forward to getting out of tonight? Feel free to drop that in the chat. Don't be shy either. It'll be one big happy family tonight. Learning something new. I like that. Pretty sure I came across you by way of someone sharing your book. So you're curious. That's awesome. Interested in turning my small capital into larger passive income to put towards my screen printing business. Very cool. Same, learning something new. Wonderful husband. Send me this. Follow on IG. Cool, cool, cool. Your sister sent it to you. Great, great. Looking to learn new decision making when analyzing the markets for opportunities. Awesome. You're in the right place. You are in the right place. Welcome, welcome, welcome. Again, I was asking everybody how they found out about tonight, through a friend, through email, through social media. Um, just curious. Just curious. A friend. Awesome. Through an email. Awesome, awesome, awesome. And lastly, what city are you all in? What city, what country, what city, what country are you in? M-Town, PTY, Quinte, uh, Nashville, Memphis, Olive Branch, DMV, Miami, H-Town, all over. Okay. GA, awesome. Well, we're gonna get started. Thank you all for coming to hang out, coming to learn something new, or dive deeper into the knowledge that you already have. I'm excited to share with you, very excited to share. How this all came about was really, I usually do these once a year, and I'm in Panama, and I was here with my friends, and we decided to, he's also the co-author of the other book that I wrote called The Blackprint, You Are the Edge. And we decided to do kind of a book signing, hangout, cocktails and conversation. And I started asking myself, like, for the people who came, how could I add more value to them? And I decided, hey, well, I might as well do a training. And so just open it up wider to everybody else as well. So that's how this all came about. And I'm very excited to share. So for those of you all who are here tonight and somebody else told you about it, we have more people popping in. You should send them a text message, take them out to lunch, something, thank you, for getting you in this room, because I plan to share. I plan to make this a life-changing evening for you, and I'm excited. So you want to definitely have your. It is going to be recorded, so you'll be able to play it back, and I'll send it to you. You definitely want to take some notes, and I'll be checking in throughout to ask questions here and there, but definitely there'll be some questions that I'll need to answer at the end. And I want to introduce you all to Rika. You want to come back on the screen really quick? This is Rika, Derica Davis, and she is the only other person in 10 years that I've licensed to teach people the Blackprint. And so she's going to be, she's an incredible trader, incredible investor, and she just got it. And she's going to be monitoring the chat for your questions and so forth. So this is Derica, and you'll be seeing more of her for sure. So you might want to wave, just a little wave with the nice frames. All right, cool. So let's get busy. Let's get busy. I'm going to share my screen here. All right, drop some ones when you all can see my screen. You can see my screen. Just drop some ones in there and let me know that you can see it. Awesome. All right. Well, my name is Al Pickett. I am the founder and author of the Blackprint, The New Rules for Winning Finance, Freedom, and Flexibility. So I wrote this book 10 years ago. And it was something I never planned. It was just out of seeing how bad the advice was on the internet. And, you can either complain about it or you can do something about it. So I decided to do something about it and write the book and marry it with coaching so that people get the results ultimately that they were seeking. I've been trading 20 years. And then this is the 10th year of the Blackprint. Another book came out of that, which is The Blackprint, You Are the Edge, with my co-author, Eric Matthews. And in that particular book, we're just breaking down the psychological frameworks necessary for somebody to have that major shift as it relates to trading. But these things also apply to every other area of life, because ultimately who you are shows up to do the job. So if you want to have next level results, then it's about change and transformation. And so that's what that book is about. Again, I've been trading 20 years. I love it, enjoy it, and I'm gonna get a little bit excited. So you may see that Rika's gonna slow me down here and there because I get excited and start to, go fast. But feel free to follow and share anything that you see or hear on social media. Feel free to follow me at Mr. Al Pickett. That's Twitter, or whatever is it called, X now, X, and then Instagram, and then LinkedIn. Feel free to connect. Would love to connect and have more conversation. All right, so let's talk about how and why I got into this business. So I had a financial advisor very early on, and he got me an 82% return in 1 year, 82%. And so I said to myself, and this is me giving him my money and saying, hey, you know, all right, you're gonna put it to work, you're gonna manage it, and they, you know, was taking care of my life insurance, my uh, uh, key man policies, just everything that has to do with like your planning. They were doing that whole thing, and so this 82% came out of that. And at the time, I was running a mortgage company in the mortgage business, and I started to say to myself, entrepreneurially, like, okay, if I can get anywhere close to this 82% on an annual basis, this is, I don't need another, like, this is the business I need to be in, and I don't need another business from the standpoint of, excuse me, I was managing employees and I was location dependent, right? So having to anchor to one location and managing employees, and you know the difference here is that I'm putting money to work and it's growing and growing and growing, and I'm not having to do a whole lot to do that. That was enticing to me, and so that's how I got into the business of managing my own money. I essentially called my financial advisor up. I knew that it was only so far that he was going to be able to take me in terms of my education. Um, so I took that into my own hands, called him up and say, hey, you know, I appreciate it. I'm grateful. It opened my eyes, but I'm gonna take it from here. And so that's how I got into this business. And I started learning books, a whole lot of trial and error. Everything you're getting tonight is 20 years of trial and error and then what works. So I'm excited to share, but this is what opened my eyes. And I've got a goal. I have a big goal for tonight. And that one goal is for you to leave with a simple strategy to find long-term opportunities without working a whole lot. That doesn't mean that you're getting rich overnight. This is not what this is. That just means that you have a way to find long-term opportunities that have a high probability of growing over time. In addition to that, is that you are leaving with a process and understanding about how the markets work. So if you had no experience before, that's okay. If you never even touch one financial, no 401k, nothing, it's okay. The goal of tonight is to make sure that you have a foundation and understanding and be equipped enough to at least make a decision about what should happen next. So here's what you're going to learn. You're going to learn how to read price through candlesticks. You're going to learn how to identify support and resistance. You're going to learn how to identify price ranges and trends. You're going to learn my favorite two things, how to participate, when to buy, and how to protect yourself when to sell. This is something that's not, the second piece is not talked about enough. Like, how do you protect yourself? Everybody, you know, talks about like, oh yeah, it's time to buy, it's time to buy. This was one of the things that was very annoying to me when I would see it on, I still see it today, but it's not, I just scroll away. But like when people say, I told you to buy this, or it's time to buy this, and my analytical brain goes, why? And under that, nobody really stops, or I would see nobody would stop to ask the question, why should I buy? And it would be objective. It'd be mostly subjective, or they heard it from somebody. And along with that, they wouldn't tell you, but if it goes here, you need to get out. You wouldn't hear that kind of advice. And so again, that's where the Blackprint was born. It's like, okay, well, there should be some objective decision making here in order for this to be successful and be run like a business. And so that's what you're going to be learning tonight. So can you all see the bottom of this screen, or do you see kind of my dashboard? Let me know.
I see 1, 2, 3.
Perfect. Okay, so the number one, long-term growth in the stock market. I'm going to show you a chart that shows you that the stock market has gone up over time. That's just it's It's a known thing. The S&P, the Dow Jones, the NASDAQ, through over time, it has done nothing but gone up. In fact, it's rigged to go up. It's rigged to go up. You'll hear people say, "Oh, we don't know about the market. It's rigged." Well, you've got your 401k in it. You've got, other things tied to it. You've got your golden years tied to it. You should know how it's rigged, right? We should know how it's rigged and why is it rigged to stay up, and how to participate in that. And why is your 401k going up? Why are your investment accounts going up? We need to know those things if we can know them in a very simple way. Number two, volatility. It's inherent. Volatility from the standpoint of geopolitical events, corporate earnings, investor sentiment, things like the coronavirus, the pandemic, right? That caused the market to go up, down, sideways, and everything else. But guess what? Market's back up. It's going up, going up, going up. Things that are happening around the world that seemingly where people start to go doom and gloom, the market usually is just pulling back just a little bit, only to go up. Even if that period of time is over 6 months or 7 months, is going down, over time, it's always going up. Number three, market crashes and corrections. A market crash is defined by the market really dropping 10% or more. But still, over time, it's always gone up. So it would make sense for us to really, really understand why and how these are actually opportunities. Any volatility, we have to look at that as an opportunity. Any market crashes and corrections, we look at that as opportunity. Inherent, yes, there are risks associated with that, but then that's where what you're going to learn about when to participate and how to protect yourself. When to participate and how to protect yourself. I'm big on the protection side. Big on the protection side, because if you can manage the downside, then you can participate in an unlimited upside. If you can manage the small losses or manage the downside, then you can continue to participate on the upside. Everybody with me so far?
There's a question.
All right, let's see.
I thought I saw a question. Let's
How to
see.
feel about a bull market in the crypto? Well, it's funny that you asked that question in the Zoom meeting question. How to feel about a bull run with a crypto and the stock market? All right, I think I understand what you're saying there. So let's take a quick walk in nature. How many of y'all, or just drop some ones if you've heard of a bear in a bull market? You all definitely know what a bear and a bull is, but if you've heard of a bear in a bull market, just drop some ones. All right. And this has a lot to do with the way that these animals attack. So a bear swipes down. So that's just a market that's going down. You typically associate that with red. We see red candles, or we see red. You go to CNBC or Bloomberg and it's like, oh, it's red, it's doom and gloom. And every headline is saying it's the end of the world. That's, when things are bearish. And the other side of that is the bull thrust up. So that means the market is going up. And obviously that's associated with green. And so that's usually at the time where you see everybody show out on, they say, hey, my crypto right now where people are saying, hey, my crypto is up. Look at my Bitcoin, look at my Dogecoin, all the things are going up. That's when you're in a bull market. And it has everything to do with how these animals ultimately attack, right? So bulls going up, bears going down. That's going to be very important for everything else that we cover. Everything is going to be connected to each other step by step. So in this piece, I want to talk about the different investable instruments. There was a point in time where I didn't know all of the things that you could trade or invest in. I didn't know all of the things that you can trade or invest in. And everything that we use in life is that that we use on a day-to-day basis can be uh, bull markets and bear markets exist for those things, and they can be traded and invested in. So I'm gonna go step by step with this. Commodities, corn, wheat, sugar, spices, soybeans, oil, seeds, beef, natural gas. All of these things are commodities, and so they are rising in price and dropping in price in the form of bull markets and bear markets all the time, all the time. Uh, Let me know in the comments if you knew this. If this is new information to you, drop some ones in the chat. If this is new information, if you didn't know that you could actually invest in wheat, let me know in the comments. Beef, the beef you eat, natural gas, all of that. All right, awesome. Metals, gold, silver, platinum. These are all metals. They're under the commodity chain as well, but they can be invested in for the long term. If you, well, you're going to learn how to see when gold is going up, and you'll say, okay, well, I can participate in gold continuing to go up. Generally, when you hear that gold is going up, it's because there's a lot of pessimism in the world, and people are running to safety because gold is or metals, you can touch them. So they're a store of safety. So people are pulling their money out of risky things, quote unquote, stocks, or they're pulling their money out of stocks or what they would consider risky and putting it into metals like gold, silver, platinum, and you can do that for the long term. Stocks. Everybody pretty much knows that you can invest in stocks, right? So what you see here is Google, Apple, Meta now, Amazon, and Microsoft. And these are mostly technology, but your stocks, we're going to look at commodities, we're going to look at stocks, we're going to look at everything we talk about tonight. We're going to take a look at with a process. But every stock that you can think of, let me know in the chat. Because I want to look at some of them. Drop some stocks that you either you own or you're curious about. Drop them in the chat. I'm going to write them down, and we'll take a look at one or two of them a little bit later. Nvidia. Anybody else? Walgreens, Google. Okay. Google, Walgreens. Awesome. Okay, we'll take a look at those a little bit later. Currencies. How many of you all knew that you could invest in currencies? If this is new information to you, drop some ones. But your British pounds, your Japanese yens, your euros, you can, if you think that the value of that currency is going to go up, you can be a buyer in it long term. If you think it's going to go down, then you can actually let's use the word, you can bet against it that it's going to go down and profit from it falling. But you can do that very on a long-term basis. It doesn't have to be something that's short-term, but the insight here is that you can actually do that against the currency, and you're going to learn how to do that. Citywide, PANW, Citywide. Okay, got those on there. All right, so we think that the British economy is going to do incredibly well. This is, thinking out loud. If the British economy is going to do extremely well and their currency is going to buy the British pound and profit from it continuing to rise in price. So we're going to look at some currencies as well. Cryptocurrency. one of the questions that was asked about cryptocurrency. What do I think about what's happening there, right? Cryptocurrency from the standpoint of Bitcoins, Ethereums, there are all kinds, but these are the main two. Cryptocurrency, Bitcoin and Ethereum are the main two. And even though it's relatively new, it is just a medium of exchange. Ultimately, that is what cryptocurrency is right currently, is a medium of exchange. So if one of the ways that people are using it right now is a store of value, right? They think the dollar is not going to be strong. They don't think it's going to be around. They don't think that fiat paper currency is going to be around. So they are investing in cryptocurrency as a replacement of the dollar or fiat currencies, paper currencies, as a long-term store of value. So we're going to be looking at Bitcoin. I think that's going to be interesting for a lot of you all as well. And let's go here. Okay. So this is where we get into uh, a lot of the training. Just like everything that you all do professionally, there's a common language associated with it. And there's a foundation associated with it. And as it relates to the markets, there's a common language, and that common language is price. That common language is price. Every one of the instruments that we just looked at has a common thing associated with it, and it's price. Every one of those has a price, whether it's $1, $2, or $3. Gold has a price. Wheat has a price. Facebook or Meta has a price. Bitcoin has a price. And so within that, the extending that common language is what is the foundation of how we understand what the markets are doing and what they are telling us. It's either in a uptrend or it's in a downtrend. And there is a pattern that exists. There is a pattern that exists. So you're going to see me talk about this over and over and over. And we're going to identify this on some charts. Uptrend, downtrend. So it's going to go up, come down a little bit, and continue up. We're going to go down, come up a little bit, and continue to go down. So there is a pattern that exists, and this is there is more language, which I'm going to talk about next. There's more language associated to this of how we identify what's happening and then how we participate in that. Is this pretty clear in terms of this pattern? I want to make sure this is really, really clear at the moment. Drop some ones if that's really clear. Awesome, 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 awesome. Okay, so this, I'm only going to talk about tonight, I'm only going to talk about buying. I'm only going to talk about buying, or what we call a bullish structure. What we're talking about is a market that is continuing to rise. And what is going to happen in that kind of scenario is there's going to be a low point. This is something that you can write on your in your notes. It's going to be a low point, a high point. You're going to see this pattern over and over and over. There's going to be a higher low because it's a higher low point than the previous low point. And then it's going to be a higher high because it's a higher high than the previous high. And then we're going to anticipate that there's going to be a higher low, just a HL, and then a higher high. Drop some ones if that makes sense. If you're with me on that, if this is a low, a high, why this is a higher low is because it's just a higher low than the previous one. And then this is a higher high because it's higher than the previous high. And this is higher than the previous low. And this is higher, this point here is higher than the previous high. So when we're talking about common language, this is what that looks like. This is the this is the market structure of how markets move and how we can understand what's happening and what to do next. All right. Anybody have any questions about this? Anybody have any questions about this before we move on?
There was a question in the chat, but I think maybe it could wait till the end.
Okay, awesome, thank you. Second here. Okay, cool. All right, I know this looks super, super, super kindergarten, but this is KISS. Keep it simple. Stupid is probably how you heard it, but I say keep it stupid simple. And everybody here, you know, when I get asked about like, oh, is it a bunch of math? Is it a bunch of math? Am I gonna have to do this? You know, like calculus, etc. If you can count from 1 to 10 and 10 back to 1, I need y'all to let me know that you can do that before we move on. Let me know that you can do that. 1 to 10 and 10 back to 1. This is very important. It's as elementary as this seems, it's so important to everything that we're going to talk about next. And I have my clients do this on calls. I have them 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have them do that for a specific reason, and you're about to see that now. This is nothing but, or would you all agree that this is a range of numbers from 1 to 10 and 10 back to 1? That's a range of numbers, right? Let me know what the midway point is. What is the midway point? What is the midway point between 1 and 10? 5, 5, 5, 5. Somebody said 3. You know, we might have to have a different kind of conversation. All right. So 5 would be, what's another way that we can say midway? What's another way that we can say, just however, whatever comes to mind first, what's another way that we can say midway? Middle, middle, mean, median. Oh, that's good. Oh, that's good. Half, I like that. Okay, very good, very good, very good. All right, let's move on. All right, so this is how you read candlesticks. How you read candlesticks. Remember the bullish and the bearish? So this green representing that the market went up. This bearish is red representing that the market went down. Now there are 6 components, and I'm going to go over this in multiple slides in different ways because repetition is important. There are 6 components to each candle. There's an open, there's a close, there's a low, there's a high. There's the body of the candle, and just like every candle having a wick, so this is the wick of the candle. So those 2 pieces, body, wick, but then there's the open, the close, the high, and the low. Everybody with me on that so far? Same thing for a bearish candle. A candle that goes down is going to have an open, a close, a low, and a high. The difference between the two is that a bullish candle is going to open at the bottom and it's going to close at the top. A bearish candle is going to open at the top and it's going to close at the bottom. And all it's representing is that the price, the gains went up, and this is representing, or that the stock or commodity or crypto or any instrument that we covered tonight already, that it went up and here it went down. And remember how we just looked at the 0 or the 1 through 10? right? This is nothing but a range. So it opened here, went here, so just went down and went up, but didn't close there and actually closed here. And that's just representing a price range. So when you see these, the intention behind this, me explaining this is so that from now on, when you see a green candlestick, you can really understand what's happening underneath the surface. Is that, oh, it opened at the bottom and it closed at the top. And this was the very high of the price, and this was the very low of the price. Everybody tracking there? Drop some ones if you're tracking. And on the right side, if the market is going down, then it's going to open at the top, right? This may be the highest price, but it didn't close there. This is where it opened. It went back some, came all the way down, didn't close here, but it closed here. And that's a bearish candlestick. This is going to be, I'm going to tie it all in the next few slides of why this is important, because it's communicating something to us. All right, everybody tracking here. I'm going to move on to the next slide. Okay, so this is just a more, a cleaner version of this. Opens at the bottom, closes at the top. This is the very high. This is the low. For a bearish candle, opens at the top. This is the very high, very low, closes at the bottom. Drop in the chat and tell me what your favorite, fruit is in the chat. Your favorite fruit. Oranges, kiwi, pineapple. Oranges, grapes, mango. Orange. All right, cool. All right, so let's look at the path of price. Can you all see this pattern that we initially looked at on one of the beginning slides? Can you see this pattern? You see the uptrend situation here? So I'm going to use mango, and we're only going to talk about bullishness. We're only going to talk about ranges and bullish candles in this example here. This is the open. The price of mangoes opened at 10. Let's say today is Wednesday, right? Today is Wednesday. The price of mango opened at 10. The lowest it went to for today was 5. The highest it went to for the day was 25, and it closed at 20. Excuse me. Does that make sense? It opened at 10. Today's mango market opened at 10. The lowest it went to was 5. The highest it went to was 25, and it closed at 20. And we can say that the price of mangoes went up today. Like the mango market was up today. And you can apply that to any instrument. You can apply that to any fruit. You can apply that to anything that exists. You can apply it to the houses in the neighborhood on average. That if we take that data and we look at it and say, okay, well, all right, what was the opening price? How much were people willing to pay for it on the open? Okay. And then it got down to 5, and then, it went up to 25. But ultimately, the price that people settled on of how much they would pay for mangoes or whatever the thing is 20. That is how a candle is formed. Somebody let me know what the midway point is. What is the midway? 15. So let me ask you a question. This is a business one-on-one. Keep it very, very simple. If I wanted to buy mangoes at a discount, what price would I really want to pay for the mango? If I wanted to buy mangoes at a discount, what price would I want to pay? Sub 5, less than 15. Less than 15. Okay, that's good. 5. Okay. 1. I like that. Anybody else? 5. Okay, this is good. So now what we're talking about is we're thinking in discounts and premiums, right? We don't want to pay the highest price. We want to pay, how are you going to profit from it? If we know that, that somebody is likely to pay a higher price, we don't want to pay the highest price because there's going to be less profit for us. So from that perspective, if we say, all right, well, the price of mangoes for this day, Wednesday, was a range between 5 and 25, it closed at 20. And if we wanted to get it at a discount because people are willing to pay a higher price, we already know that. And if a market is trending, then it's going to make a higher high. So we're anticipating the next day or at some point that the market is going to make a higher high point than the 25. Everybody with me on that? It's going to make a higher high because this is the pattern. This, right? So it's going to come down a little bit and then make a higher high. So we want to buy mangoes at anything less than 15. If we can buy mangoes at anything less than 15, we're getting a discount on it. And we know that people are willing to pay a higher price, or what's in motion generally stays in motion. Then everything after that can be gains. Everything after that can be gains. So we want to pay 14, 13, 10, 7. Hey, the lower it goes, the better. And we can use, we can profit from the upside of that. Is that pretty easy to grasp? Is that pretty easy to grasp? Drop some ones if that makes sense. All right, now if you need a little bit of help before we move on, let me know. Awesome. What's in motion generally stays in motion. That's right. If a train is going north, it's not going to stop on a dime and go south. The probable inertia, the probability of that is very, very low. So that's what I mean by what's in motion generally stays in motion. All right. So now we're going to get into some more foundation of how you understand what's happening in the markets. So what you see here is a house. And the reason I use a house because it's a structure. It's a structure. And so the market is full of structure. And everybody can associate. Everybody lives in a house or apartments. You live in something with a ceiling and a ceiling and a floor, right? So somebody drop in the chat and tell me how many floors exist in this structure and how many ceilings exist in this structure. All right, how many floors, how many ceilings? How many floors, how many ceilings? Great. So if we have a ball, and if I drop a ball on the floor, what do we anticipate that ball is going to do? What do we anticipate that ball is going to do? We drop it on the floor. It's going to bounce, right? So reasonably, we can say that the floor is supporting, that the floor is some kind of support. If we throw it up to the ceiling, what's likely to happen? I mean, what not likely to happen, but should. If we throw a ball up to the ceiling, what's likely to happen? come back down, resist, right? So that is, if I could simplify this anymore, I would. That's support and resistance, because you have a ceiling. So when you throw something up at the ceiling, you anticipate it's going to come back down. You're probably not going to stand under it. And then same thing with the floor. If something, you throw something on the floor, you anticipate it's going to bounce. All right. So now we're going to put some more common language with this. So we have a floor, a ceiling. Above that, a floor, a ceiling. Above that, a floor, a ceiling. Above that, a floor, a ceiling. This is what we call support and resistance. This is what we call support and resistance. Now, the cool thing about this is that we can easily identify these things. We can easily identify what is support and what is resistance. And we can do that using our candles. And you see that I have it color coded. I have a color coded here for a reason, because there's going to be a sequence in candles at those particular areas. Can anybody guess what kind of candles are going to be at the bottom and what kind of candles are going to be at the top? What kind of candles are going to be at the bottom? And what kind of candles are going to be at the top? Bull candles at the bottom, bulls at the bottom, bears at the top. Like that. Bear at the top, bull at the bottom. Very good. Very good. Very good. Awesome. All right, let's move on. All right, so you are correct, but I'm going to add one little thing to it. Well, if a market went up, there has to be green candles for it to go up, right? So it's usually going to be a green candle followed by a red candle at a place of resistance. So not usually. We want to look at specifically and say, oh, there's a red candle and a green a green candle and a red candle. Anytime you see a red candle followed by a green candle, I'll say that again. Repetition is so important. Green candle followed by a red candle, no matter where you see it, is some kind of resistance, because that first green candle represents that the market went up. The second one represents that the market went down. There was resistance. Everybody with me there? Anytime you see a green candle and then a red candle, it's some kind of resistance. The reverse is true, that anytime you see a red candle followed by a green candle, it's some kind of support. That means that the buyers are supporting this particular area. So you'll see me, I can just put a line under here or a line here. That means the sellers drove the price down. This means the buyers drove the price up. Drove the price down. Arrow. Drove the price down. Drove the price up. Everybody with me on why that's the case? If you needed a little bit of help, now is the time. I want to make sure this is very, very clear. Drop some ones if it's clear. Great, great, great.
There are some people that need it repeated.
All right. Awesome. Can you repeat? Awesome. So the green candle, let's do it like this. The green candle represents that the price was up, coming up, and this red candle is showing that the price went down. So we're going to say that this area is resistance. Anytime there's a green candle, then a red candle, it's some kind of resistance, because the price came down. Just like a ball went up and hit the ceiling, it came down after that, that's resistance. And the reverse is true here, that if anytime there's a red candle followed by a green candle, the price went up like that. And that represents a floor. So you have a floor and a ceiling. Is that helpful? Dahlia. Awesome. Awesome, awesome, awesome. All right, so now we're gonna move on. We're getting real close to going to some real examples here. Okay, so remember that I talked about, I want to give you one strategy, one way to know when to participate, one way to know when to participate, and then how to protect yourself. So whenever there's a green candle, then a red candle, followed by a green candle, that's when you know there's a time to buy. When it's, let me explain that another way. When it breaks this ceiling like that, that's how you know it's time to buy. So it's going to be, I'm going to draw it out over here. So what it's going to look like. Green candle. We're going to go look at some examples just like this. Red candle. And the green candle is going to be higher than both of those. This is what we call a break of resistance or a break of structure. It is breaking a ceiling. It is breaking a ceiling. Does that make sense to everybody? I want to make sure this is very, drop some ones if it makes sense. Because this was the highest, this was that highest point, or that's where the market started to come down. And we want to see a green candle go above that ceiling, excuse me. And that's how we know when it's time to buy, because it's communicating that what's in motion has a high probability of staying in motion and continuing to go that direction. All right. So the same thing is true down here. The same thing is true here, that when there's a red candle and then a green candle, it's being supported. It's being supported. So then you would anticipate, what is the next candle that you would anticipate in this area? What's the next candle that you would anticipate when you see a red candle and then a green candle? What would you anticipate the next candle to be? Green. Tamika said red. Okay. All right. Red. Okay. Let's talk about that. Red. Let's talk about that. So remember that it's very good. Very good. Draw this out. I'm gonna draw it over here. So this is your green candle. Every candle has an open. Where did this green candle open at? Where did that green candle open at? Somebody let me know in the chat. It's very good, very important. It opens at the bottom. It closes at the top. This is the highest point. Move this out of the way. And this is the lowest point. So we would anticipate if the market is going to continue to go up whenever you see a green candle, talking about this candle right here, right? Then you're anticipating that the next candle, because it's going to stay in motion, or stays in motion, if there's an uptrend, it's going to look like that. You would anticipate the next candle is going to come down like that and then go up. So now, if I ask that question again and make a higher high, so if this was the highest point, we would anticipate that if this was the highest point, we would anticipate that the next candle is going to make a what? That's the highest point on that candle. We would anticipate that the next candle is going to make a what based on what we talked about earlier. A higher high point than this one. So we would anticipate another green candle after this candle. So a red candle, green candle, then a green candle here. If it was a green candle, red candle, then if we're gonna look to buy, then we wanna see another green candle above this area. Bottom right of the chart. Is that pretty clear to everybody? Or do we need to go over it a little bit more? Let me know. Is that pretty clear?
I think there was some confusion about if you were referring to the candles at the bottom of the chart or the top.
Got it. Yeah, so both of them. So here we're gonna focus on the top first. Once we have a green candle and a red candle at the top, this is what we call the market's gonna continue to go up. Then if it's green, red, and then we get another green candle like in this area here, that breaks above this area, that's a buy point. That's where you can participate, buy from a long-term standpoint and anticipate the market is going to continue to go up because it's breaking a structure. Think about it as it's leaving the first floor, going to the second floor. It's leaving the first floor and going to the second floor, and we anticipate it's going to go to the third and the fourth. And down here, where you have a red candle and a green candle, how will we anticipate that the market is going to continue to go up? Is that this is already put in a floor. So the next candle we would anticipate is going to make a higher high point than this one. So we would anticipate another green candle. So essentially we're looking for a red candle, green candle, and another green candle to continue to go up. And here we're looking for a green candle, then a red candle. And if another green candle appears, that is a buy point. And the same thing here, this is a buy point. Is that better? Is that more helpful? Awesome. Everybody else? All right. Okay, so I want to move to protection. Okay. If we've talked about participation, I want to talk about protection a little bit. A red candle and then a green candle represents what? What do we talk about? One, if there's a green candle and a red candle, it represents resistance. And then if there's a red candle, then a green candle, what does it represent? So if you lose your support, then what happens? If you lose your support, if you're walking and you lose your support, what happens? You fall, and there's a potential for you to fall. There's just potential for you to fall, right? So when we see price, we're going to look at some examples like this. When we see price go below some kind of support like this, we want to be out of the market. Because just as high can become higher, just as the market is making higher highs, low can become lower. I should probably do that in red. So just as the market is making higher highs, if it loses support, we don't want to be in that. A very simple concept. Drop some ones if you need more explanation. Drop twos. If that makes a lot of sense, drop some ones. Y'all are tracking. It's good. Very good. Very good. All right, I'm going to say that one more time before we move on, because we're about to go look at some examples. If this is support and we lose that support, we don't want to be in the market. We don't want to hope. This is where, let me say it this way. This is where people get in trouble. This is where people get in trouble and invest in their own, because there are people who start to hope. Oh, it's going to come back. I know you've heard that saying before. Oh, I know it's going to come back. Well, how do we know? How do we know it's not going to go lower? Because what's in motion generally stays in motion. So we want to be on, if we're buying, we want to be participating in the upside, but we want to limit the downside because we can always wait for another green candle. We can always wait for price to start to go higher, but we don't want to have $100 in something and let it go down to 50 if it's communicating to us that it wants to go lower via, oh, it's breaking support. Just as if you were falling, it's breaking support. I need to be out of that because I can always get back in. I would rather be out wishing I was in wishing I was out. And so what this does is give me a process to get out at the right time, and then I can always participate when the market communicates that it's ready to go higher again. Does that make sense, everybody? All right. All right. We're doing on time. Okay, good. All right. Any questions before we go look at some real examples? Any questions before we go look at some real examples? We're going to look at NVIDIA. We're going to look at Google. We're going to look at Walgreens. We're going to look at PANW, Citywide. What about, we'll look at Bitcoin. And we're going to look at, we should look at wheat. And we should look at something like cocoa. Yeah, like cocoa. Gold
Someone
stock.
mentioned gold. Yeah.
We can look at gold. We'll look at gold in general. I'd have to look up a gold stock. Let me help you out. Okay. Dogecoin, ASM crypto. Let's see how much time we have. All right. All right. Can you all still see my screen? Perfect. Okay, so this is this piece is going to be very important. So up here, you see these different time frames. This is NVIDIA, by the way. I think I'm gonna leave this D1. This means 1 day. This means that each one of these candles is 1 day in time, right? Right now it's on the W, it's on the weekly. So this means that this is 1 week of price, one actual week. That means that like this candle right here, well, we're still in this week, but it opened one price. The prices are gonna be up here, right? So that O is going to be the open, the high, the low, and the close. This is technically all you would ever need in terms of being able to read a candle is open, high, low, and the close. So you can see that right now we have opened at 841.30. The current high is 897.24. The low is 834.17. And obviously we're still in this week, so we don't have a official close yet, but that's the close as of today is 887. All right. So I want to ask you a question before we continue. Now that we've gone through how to read a candle, is that pretty clear? Can you see where the open is? Can you see where the close is? Can you see where the high is? Can you see where the low is? Now that we've gone through how to read a candle. Let me know in the chat. All right, very cool. So what I'm gonna do is I'm gonna start on a weekly chart. Okay. And this is representing 1 week in time because we talked about long term. How do you get positioned long term? Yeah, how do you get positioned long term? Now you can see these red candles and green candles all over the place. Let's start at, let's start here. Let's just start here. This is December. Start at the January of 23. We're gonna start here. Okay. We're gonna just go up from here. Green candle, green candle. Each one of these candles is representing a week. Green candle, green candle. You can see where it opened, where it closed, what the high was. The price is always going to be up here as well. So remember how I said that, like, well, here's what I'm going to say. You want to look at red candles in a bullish market. You look at it as a red candle as an opportunity. You look at it as, oh, the market is pulling back. It's just taking a pause. It's just taking a pause. That's how we want to think about it. It's just taking a pause. So we want to seek out red candles. You see this red candle? What did we get after that? Did we get a green candle after that? We're gonna put a horizontal line for every time this happens. Red candle, green candle. Everybody with me on that? So you have a green candle, then a red candle, that's your resistance. And then we have a green candle. So that means we should buy. So we're gonna put a horizontal line here. All right. So the price over here is $231.24. We have a red candle and a green candle. We're waiting on a green candle. When do we get a green candle? This is in April. We got a green candle here. All right. The next candle, let's just go ahead and, well, we're going to wait for it to go above this area. So this candle right here, see how that candle closed above these two? So we are above we've gone through the ceiling. If this green candle, then a red candle put a ceiling here and this candle went above it, that's a break of that ceiling. So we're gonna say that we bought there. And what is this? This is May. So you didn't get another buy until May. But the buy is $277.85. You see we have a green candle and a red candle? And I'm gonna stop at those three and explain something first. Green candle, red candle. Red candle should be seen as an opportunity. You see we've got a green candle that closed above it. So we'll say a buy right here. All right, so this is in 23. Now look at what happened. Where's the price right now? Somebody tell me what the price is right now. 885, 885. So the opportunities are endless. We're gonna go over more of these, but this is 231. You never have to fear missing out in a bullish market. There's always a bullish market somewhere. This setup is happening. This one thing is happening all the time. This one thing is happening all the time. So $231, 270 some dollars, $300, and you don't have to check it every day. And it's at 887. That's participation. That's a very simple way to participate. I'll go and talk about this area too. As you can see, it just looks a little crazy, but we'll talk about that. We got a lot more to cover in a short amount of time though. What is the protection for this? We want the price, from a protection, we want to get out. So let's say we buy here. Let me remove these real quick. Come back to that, load this up. If I buy here, and price goes below this red candle, green candle, red candle, green candle, because that's let me know what this is in the chat. What would we identify a red candle followed by a green candle as? What would we identify that as? Support, 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 support. Very good. So we could literally say that we don't want to be, putting it in the wrong place. That if, I'll just leave it there. If price were to drop below that area, see how we can define that as a number. And this was what I mean, this is what I mean by objectivity, that I can objectively identify where I should buy because there's a process, and I can objectively identify where I should get out and limit my losses. So I can buy at 233 and limit my losses at, call it 201, to say, all right, well, we'll find another opportunity. There's a whole nother conversation about risk management, about how much you should risk and so forth. We won't have time to get into that. The whole idea is for you to have a process to see, and additional risk management concepts you'll be able to research for yourself as well. But the idea is I can participate here, I can protect myself here. You're never risking a lot. You're never risking your life savings or any of that. You're risking small amounts of money because you will be wrong on some of these. There's no question about that. You will be wrong on some of it, and that's okay. That's the whole purpose of protecting the downside. So I want to show you an example of where you would get in, where you would get out. And I'm gonna do that on this a couple of more times, and then I need to get to these other ones. But everybody tracking so far? Here. And let's use this. Here's a green candle and a red candle. Here, you're gonna buy there. Where are you gonna protect yourself? Under here. 258 is a buy area, and then 222 you get out if it drops below that. And notice how it just continues to move up. If I do like that. And it's that same little, this is why the red candles present opportunities, because it's the same little wave. Remember how that wave sometimes is a little bit more drastic than this? But when it's waving, what's in motion generally stays in motion, you start to trust that after you see this so much. All right. A lot to look at. Let's look at this area right here. This is a green candle, a red candle, a red candle. Here's a green candle. Above, it broke the resistance right here, right? So it's above that area. So we're gonna say, okay, great. We're gonna buy right here. Where are we gonna put the protection? Right under here. So 426, 368 is where we would get out. And sure, for weeks, it was just up and down, up and down, up and down, up and down, up and down. But our protection held. And what happened after that? What is the price on this? 426. That was November. This was June. So all of summer, just kind of held in there. And then after that, it took off again. And this is a weekly chart. I'm not looking at the daily chart. I'm looking at a week where you can say, okay, I see what I need to see. I'm gonna buy here, and I'm just gonna come back. I'll come back. I'll monitor it, but I know where I get out at, and I'll check it in. I'll monitor it. I'll come back in a couple of weeks and see how it's doing. Does that make sense to everybody so far? All right, let's look at some other examples real quick. Let's look at Google. Google. All right, Google. What is Google? Goog. See what's happening with Google. All right, so this is the weekly chart. This is a great example. Great example of why you need protection, right? So look at, let's start here. Green candle, red candle, green candle. This candle closed above this area right here. This is a break of resistance right there. So this is a break right there. So we're gonna say we're buying here, and we're gonna get out if price comes below this area. So notice how this week here we came down a little bit, came up. So we got some gains. So what's that? 142, 155. Let's see how it's coming down now. So this is the reason why you want to protect yourself. It may or may not come all the way to this area, but this is the reason why. Okay, well, are we going to get another? Are we going to get another opportunity to, if it were to hit this particular price at 129.50, and you lose, let's say you're risking 1% of your capital. So let's say it's $10,000. Well, if it hits this particular number, then you lose $100. So you're not risking $5,000. You're not risking, $9,000 of 10,000 you have. You're risking $100 so that you don't, you're not afraid. You're not doing anything that you're not putting your life savings at jeopardy, and you're not going to be fearful that you're going to lose this $100 because it's not going to change your life in any way. So if it were to hit this particular number, you exit out of it, that's fine. And then you wait again. And this is just Google right now for the last couple of weeks. But sorry about that. But before that, you can see there were opportunities where it just kept going up. The same exact process. Okay, let's look at it a little bit. Well, I'll start here. Green candle, red candle. We do nothing until it closes above that area. That candle closes above that area, you need to have a stop loss, or you need to have a protection under this area. I'm going to use this here. It went up a little bit, came down a little bit, never hit that area. Up a little bit, down a little bit. What is that? 101. Okay. And I'm going to look at a few more inside of here. Can everybody see that right now? Can you see where I'm putting it, why I'm putting it there, what the actual participation, when you press go? I want to make sure that that's very, very clear. When do you sell for profit? That's a great question. That's a great question. Turn this. What Tamara asked is, when do you sell for profit? What the best idea is to move where you would close out as the market makes new highs. So here, let's say this was the high and it came down and it started making new highs like that. You are changing where you would get out of it in terms of, oh, you're going to move it under some kind of support. You're going to say, oh, well, now I'm going to get out here, or now I'm going to get out here. You let the market get you out versus you closing it, because you're never really going to get 100% of any move. Does that make sense, Tamara? You're never going to get 100% of any move. So you're going to be moving. You're going to be moving that area where you would get out to, okay, well, you would lose XYZ amount here, right? Well, let's say that $100. Here, you probably would lose like 10. Here, you're getting closer to not losing anything, and the market's continuing to go up. As it continues to go up, now you're locking in some gains. As it continues to make higher highs, you're locking in more gains by changing where you're going to exit out of the market. Because who knows if who knows if it's going to stop here and then continue to go. Because if it stops here and continues to go, you're just going to be continuously locking in those long-term gains. locking in those long-term gains. But your original entry was from over here. Does that make sense, Tamara? Tamika asks, how far back are you looking to establish your protection? Look at the lowest point, so where you got in, or where the break was, wherever the break, like this particular area, you have bullish candle and a bearish candle. The candle that closed above it, whatever that lowest point was, that's where you're gonna put that protection. Because notice how price came down a little bit. So you wouldn't want to put it too close. You want to put it under that the lowest point, which would be that here, right? Here, up. So whatever the lowest point is, that's where your protection goes. Great question. Great question. All right. All right, I got to move on to some other ones. There is Walgreens, PANW. Then we're going to move on to Bitcoin and keep going. So let's go to Walgreens.
Hey, Al, there's a question. It says, when the green candle closes per that time zone, or is it just for stocks? I don't follow.
Let's see here. And the green
You
candle,
might want to read
that's
it.
the end of the trading day per that time zone, or is it just for stocks? If we're on a weekly chart, then that is when that candle closes, it wouldn't close until the end of that trading week. So that weekly candle is closing whatever that at the end of that trading week, or for this, we're talking about Google on Friday, whatever the close is, whatever the price is on Friday of that close, that's going to be the closing price of that candle. So whether it's a green candle or red candle, I'm talking about this candle in particular, if it were to stay red and if it were to close like this on Friday, if it were to close like that on Friday, then that will be the closing for that week. Let me know if that makes sense. All right, go Walgreens. What is Walgreens? I don't know what is Walgreens? Food Alliance. Is it Wall? Okay. All right, can't spend much time on that. PANW. Okay, this is good. All right, so this is the weekly for PANW. So you can see that from whatever that period of time, and you see kind of where price is now. Even here, so you have a green candle, a red candle. I'm just gonna walk through this. This is great. This is a great example, actually. A green candle, red candle. You see that red candle there? And then this green candle that moved up. So let's say, for instance, you were a buyer here. You see it's still going down. You could just be out of here at 333, and that's all you lost versus it continuing to go down. Very, very good example. Very, very, very good example. Does that make sense to everybody? Red candle, green candle, red candle, green candle. This candle closed above it. This is the buy, and this is where you protect yourself. And notice how that's all you lost versus losing more of this as it continued to go down. Very, very, very important. Let me know if that makes sense. Can you see the simplicity of this one thing? It is very important. What makes this difficult, as simple as I'm keeping this, what makes this difficult is fear, greed, hope, and regret. So people will not have protection in place. Right? That's a fear of being wrong, or the fear of being wrong. So they'll continue to let it drop and let it drop and let it drop. Oh, I know it's going to come back. And so that's what makes this difficult is the human dynamics of, hey, here's the process, but it only works if you follow the process. If you change any component of this, it's not going to work. You have to do that when buy when it does that, sell when it does that. Buy when it does that, sell when it does that, or it won't work. All right, in a trending market. So let me look at some other ones. Let me look at some other ones here. Citywide, I'm not sure if they are only citywide. Yeah, they're not on the exchange. Let's look at Bitcoin. All right, so people have been talking about Bitcoin, 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 Bitcoin. Can you see where there were opportunities to buy before um, everybody started talking about it? This is the weekly chart. Isaiah asks, so you choose your protection based on the previous red candle low. That's correct. Or like, I'll show you exactly what I mean by that. Let's say, for instance, here, right? In this case, if I were buying right here, so you have a bullish candle, a bearish candle, a bearish candle, a bullish candle, and you're buying right here, your stop loss actually needs to probably not this area, but I would say the stop loss needs to go under here. This is the lowest point. So 30,000 stop loss really needs to go under about 24.9-ish. Yeah, Tamara, I do. I absolutely, I look at the daily charts, but I'm wanting to keep it. You can also position on these long-term opportunities on the daily chart, but I'm wanting to keep it on the weekly so that you can see very, very clearly and see how you can be positioned long term without having to look at this at all, really, right? Like you're waiting, you can check it at the end of the week, Monday and Friday. You can check it Monday and Friday and see if you got something, if that makes sense. All right, so that's Bitcoin. So everybody's seeing how are you seeing other opportunities on Bitcoin that now that it's at 67,000, do I want to be a buyer up here? No, I want to be a buyer much lower, even right here. Here's a green candle, red candle. This is the first candle that closed above it right here at 48.6. Get me out if price drops down to here. And what has price done after that? Continue up. So participation, where do I participate? How do I participate? I'm waiting for a break of resistance, right? How do I protect myself? I'm putting it under some kind of support. When can I check and find out if there are opportunities? Friday and Monday. End of the week, beginning of the week. Super simple, right? At least I hope so. Let's look at, I'll circle back, but let's look at wheat. Look at wheat, like the wheat you eat. I have one client that only trades wheat. Is wheat in a downtrend or uptrend? Is it in a downtrend or uptrend? Can you see the pattern? See how quick you were able to spot that? That's what gets me excited, and that's why I'm very happy about that. Like how quick y'all were able to just spot, like, oh, that's going down. I don't want to be a buyer in that right now. No, wheat is going down. I mean, you can profit from that, but that's a whole nother conversation. Whole nother conversation. But you can quickly spot it now. That gives me a lot of joy. All right, let's look at cocoa. All right, what do you see here? Can you see the opportunities? Can you see how what's in motion generally stays in motion? Great, Tamara, great question that you ask about like um, about the daily time frame and so forth. Um, but you all can see now like what's in motion generally stays in motion, and each one of these red candles, this is cocoa. Each one of these red candles presents an opportunity in a bullish market. So you should be looking for those and waiting like, oh, okay, all right, let me just wait my turn. Oh, no, I'm gonna come back next week. I'll come back next week. This week, boom, that week, maybe that week, and you can get positioned in these long term. Let's look at gold. Here's a gold company, Barrick, I'm familiar with. Look at gold. Can't really get a read on that necessarily. Well, I mean, I can, but I don't want you to try to like overthink it, like be able to see it very clearly. But still, what you learned was bearish candle, bullish candle. What happened after that? Bearish candle, bullish candle. What happened after that? It went up. Bearish candle, bullish candle. What happened after that? It went up. Bearish candle, bullish candle. What happened after that? It went up. So that's that piece where you're looking for that particular setup. You're looking for that particular thing. And it's three candle sequence, but you're looking for these candles next to each other. And if you're in an uptrend and the market is pulled back some, you're just looking for another bullish candle. You can wait a week. And then after that, you got to buy and you got a place to put your stop loss. I need to go back really quick. I know it's 8:30. It's an hour and 30 minutes. I hope that y'all are learning a lot. I have so much to give in this way, but I need to remember how we talked about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And those, when the market is in discount, it provides you your biggest opportunities. It provides you your biggest opportunity. So let's say, for instance, this is probably not the best example. Let me go to gold, the actual gold. Okay. So now look at this. From down here, bearish candle, bullish candle. As long as you put your stop loss under here, you have to wait a while, but it's going to work out or should work out. All right. So here, I'm going to put this here. All right. Market continues to go up. This is November of 22, continues to go up. See how it dropped down here? Bearish candle, bullish candle. Market continues to go up. Drop down again. Bearish candle, bullish candle. Market continues to go up. Anytime it drops, bearish candle, bullish candle, continue to go up. Little drop down to here, bearish candle, bullish candle, bullish candle. This gold is making higher highs. It's continuing to go up. So all of that's, you're looking for these discounted opportunities. I'm not sure if you mean to be on private or not, but let's see. How do you pick which stocks to watch and make trades? Do you tend to stick with? That's a great question. Tamara, you don't mind if I put you on, you send it as a direct message. Tamara asks, how do you pick which stocks to watch and make trades? Do you tend to stick with the same handful? I focus on the index myself. It presents to me a whole bunch of opportunities. So I focus on the actual index and S&P to be specific. If I were not focused on one particular thing, I would focus on a sector, right? So find sectors that are bullish. Is it right now? It's semiconductors, right? Technology. Pretty much right now where we are, everything technology is going to be somewhere you want to be, right? Technology stocks are going to continue to do well. So I think that that's important. So the easy way to do that is to, I'll go to the website. But you can see what is making 52-week highs. Look at what is making 52-week highs. 52-week highs, that just says that it's making higher highs. It's communicating that it's making higher highs. So now you're waiting for the opportunity. You're waiting for that pullback to get a fresh new opportunity because you can spot something that's already in an uptrend and you're looking to continue to participate in that uptrend. Does that make sense? So you could search Google stocks making 52-week highs. Stocks making 52-week highs, and then you have a process to participate in those after they pull back. I wouldn't buy them right as you wait for it to pull back, give you a red candle, and then you go. Great question. So that's gold, ASM. I want to make sure I don't leave anybody out. If you have the Walgreens ticker, I will look at it. This is silver. You can see what this is very interesting too. Notice that this stock isn't performing well, right? Our Avino silver and gold mines is not performing well. But if we were to go to silver, let's see what silver is actually doing. Silver is it's better than what the stock is doing, right? With that particular stock from a weekly standpoint, this is still a little sideways to me, but it's still the same process. Bullish candle, bearish candle. Bearish candle, bullish candle, up. It's still the same process no matter what you're looking at, but you're gonna have companies that are lagging behind. So that's why you want to find if I need to go north, if I'm in Texas and I need to go north, I don't need to get on the train going south. I need to get on the train going north. So you want something that's moving. Thank you, Q. You want something that's moving. Is it WBA? Really?
Yep, it's that first one.
Okay. What is it doing? Bearish. So if you wanted to be a buyer in Walgreens, it's a great question. What would you want to see right here, right now? We're focused on the right side of the chart. What would you want to see happen if you want to be a buyer in Walgreens? So you have plenty of time to wait. So we got a red candle right now. We would need a green week. We wanted to close green. We wanted to make we want that candle to make a higher high. We want to see a green candle. I'm going to draw this out. We want to see this. Not that skinny, but we want to see a green candle like that. Just like that. And we would then be anticipating that the next week is going to move higher as well. When we put a protection under here, be a buyer there, and look to participate on the upside of this. And it's starting to, Walgreens is actually, from a more technical perspective, it looks like it's getting ready to do something. So you just want to wait for weekly candles to start to come in. All right. Were there any more? Okay, so let me ask a question. Let me stop here for a second and ask a question. What's one thing you got out of this evening thus far? And I'm opening it up for questions as well. What's one of the biggest takeaways that you got out of this training? You trying to, let me ask you to unmute. Unmute.
Can you hear me?
Yep, got you loud and clear.
Cool, fantastic. Sorry. I know there's a lot of lights going on in here right now. Yeah, the biggest takeaway, I mean, I would say I really enjoyed the whole aspect of the weekly uptrends. Sorry, I was a little lost just in that portion about the days. I was more focused on what would the daily trend be for that initial stock itself, but I got a better understanding of how the uptrends are moving towards a weekly. So you want to really focus on that weekly uptrend. So getting an overall perspective of how the candlesticks operate and which portion is closing, which portion is opening, because I was a little confused by the bullish candles and their longish stems comparative to the bearish candles and their shorter stems. So that makes more sense when that bullish candle is slightly higher and is pushing forward over that bearish candle. So that gave me a better understanding, especially since everything's kind of color coded as well.
Awesome, awesome, awesome. Well, I'm glad that you glad that you came, and I'm glad you got some good takeaways, and hopefully, you know, it'll assist you in all the goals you have. So that's awesome, man. Thank you for sharing. Appreciate it. Anybody else? Good entry points. Stop your video there. Good entry points, protection, location is not arbitrary. Ooh, I like that. Always set a protection. Get on the trains going north, stay in an industry. I like that. Candlesticks and patterns, support and resistance. I like that. Establishing protection at the right time. I like that. Yeah, so those are the most important things is like, how are you going to keeping it very, very objective. How are you going to participate? How are you going to protect yourself? Know that some of them are not going to work out. Very important. And that'll allow you not to over risk, and it'll allow you not to worry because you already know that's going to happen. And so you'll risk an amount that you are, that you can stomach losing, right? Or you can stomach it going down. But if you got too much on, if you have too much money at risk, then you're going to be fearful, and you may make a decision. It looked like it's about to do this, and then you make a decision that is not helpful long term. Basically, psych yourself out of a position, an opportunity. Variety of stocks to choose from. Yep, a lot of variety out there. I tend to focus. I focus on the S&P. That's one index. Occasionally, I'll trade gold or something like that, like when it's really, really moving. But I like to focus because I can be very aggressive. And then for long-term stocks, everything I do is on inside the index. Which chart? Oh, that's a very good question. Which chart are you looking at to show the candlesticks? What I use is Trading View. Trading View. They have a free version. Trading View. TRA. Drop that in the chat. Great question. Yeah, so that's what I use to view and execute. The broker I use, I don't get paid to say this. The broker I use is a Trading Station. It's more, it's more so on the future side of thing. Yeah, so it's more so on the kind of a professional level trading kind of thing. So there are all kinds of brokers out there, Charles Schwab, etc. So what really matters is that you know how to participate and how to protect yourself, and focusing on something that's why I asked about fruit, right? I've got a guy that only trades wheat. I've got somebody that only trades oil. I have people that only trade gold. So it's not that you have to spread wide. You can focus on one thing, or if you are doing something in your retirement portfolio, et cetera, and you want to pick 5 things that are moving, then you can do that. Also very wise to do this inside of a self-directed IRA, because you can grow that tax deferred, right? So I think that that's a very cool thing to research and understand as well. Any last thoughts? Any last questions before we wrap up this evening? Awesome, awesome, awesome. Okay. Well, I am grateful for each and every one of you all that popped on. Super, super grateful. Again, I get excited talking about it. Sorry about the little interruption earlier. But there's more. Happy to speak more about this as well. And you know, the only thing I ask that you do is share with a friend. I'm going to send this video to you, share with a friend, hopefully your family, and hopefully they get something out of it. And the minimum thing here is that now you can look at it and you understand what's happening. Like that's very cool. You did say we get a copy of this call. Yep, you get a copy. And do you ever do any live trades with your group? Yeah, occasionally I do them. But Monday through Friday, I'm on a morning call planning out the ideas for the day. So Monday, like 7 a.m. in the morning, I'm on a call, 30 minutes or so, planning out what can happen across indexes, gold. If they want something else, then I'll do it. But a currency, indexes, and gold, a lot, every once in a while I'll trade live with them, but it's not every day. I just plan every day. Awesome. I'm very, very grateful. Thank you for your time and attention. Again, the best thing you can do is share with a friend, and hope to see you in the future. Maybe we'll do another one of these in the future. All right. Talk to y'all in a bit. Peace.